Rick. It's Wednesday, November 11th. This is the tutorial session held twice monthly or three times if the first day of the month happens to fall on a Wednesday. And I want to show you first the trade screens I'm using for the Venture with Trade Exchange. I mentioned that we had a really bad start in Beyond Meat, and let me show you what happened. We're looking to get in to buy. I think we bought 153 and just held on to it overnight, and it had a great rally. In fact, the trader who put this one on for us, or I say, let me just get out with it. With the three of us, it's me, DJI, and Richard Knudsen. DJI is Dave Isham. Dave, as you may know, is he took over for me a couple of years ago when I was having treatment for cancer at MD Anderson. So when I refer to, I'm just going to refer to everything we did as we. But anyway, we got long, and even though money was made in a personal account on this rally, we stayed long it at the close, unaware that that earnings were coming out, and they absolutely clobbered the stock. So, and as I said, this position was done at double our usual size. We were almost double. We allocate 5% of portfolio size on these trades, but on this case, we allocated 8%, and it opened the next morning down, holy mackerel, $35. So there are three categories of trades. This was in our Rick's Picks bold category, and boy, were we ever. So anyway, we're getting clobbered, and we decided to stick with the position rather than to use a stop loss that got close to taking us out. And obviously, to have taken such a brutal beating here, the only way we can justify that, or we'll be able to justify it, is to go for all the marbles. So we're looking for a move. We're not going to try to get out if this comes back to get us even, but we're looking for big numbers, going to a bigger chart here that shows a still bullish trend in Beyond Meat, although by my own rules, the fact that this downtrend took out two very significant external lows, well, I'm looking at it now and thinking, I don't know, maybe we should be shooting just to get out. But before that can happen, this thing has to climb through this enormous gap, which is, as you know, a gap is where the top of the gap is where a lot of bulls were feeling like they were okay, and where the gap begins, the picks up, is where they all realized they were crushed. So in that airspace between this high and that low, you have a lot of people who are just saying, Lord, please just let me out with the small loss. I promise I'll never do it again. So that's why it's such tough sledding as this thing moves into the gap. All right. Other trades. This one we had in the other day, and it looked like a good bottom fishing trade. Let me just show you the pattern so you can appreciate it for yourself. Let's see here. All right, so I think I've got a really good ABC here. The B, let me just mention, did get past something external to the left of it. So it's a good pattern, and I like the kind of asymmetry. The very elongated CD does not really change the D target. It's really, you know, it's still valid regardless of how long. That we have such clarity with A, B, and C the D is it's going to be good. It doesn't matter how long it takes to get there, and it's a great place to go bottom fishing. The only problem is that we're down there bottom fishing, maybe even tentatively with the D target of this smaller pattern, A, B, C, D. Either one will work. Um, and I went into it thinking it was definitely going to get down there because, as you can see, look what happened the first time that this, it's encountered the. Let's see. We have a couple instances where this midline pivot, in this case, the one of the big pattern, it just slipped right through it, no trouble. And here on the small pattern, A, B, C, D, it cracked the midpoint pivot. So I would have bet you dollars to donuts the other day that this thing was just going to go lower and give us a nice bottom fishing trade at, either at this D, or we could try it there, or this D. And I didn't mention one other thing, and it is actually the biggest drawback to the trade exchange deal. And they're working on it, but they're slowly expanding the capabilities of the trades that we do, or the range of opportunities. But the single biggest problem we have is that it doesn't allow for partial profit. So in other words, if I get in for 400 shares, I can't take half of them off. And you guys know that my record for getting at least a partial profit on a trade is extraordinary. It is, even with the options trades, we always manage to get doublers or sometimes quadruplers, which typically leaves us with positions where there's no risk and maybe a little gain, certainly not as much as we might hope for. But all right, so you guys who've been with me for a while know that probably the key feature of the way I trade is to take partial profits when I can. So because I feel like I'm good enough to always hit a swing high or low that it's going to turn. That much I know. I think I'm about 90%, or maybe even a little more accurate on calling the turns, or at least getting close. Sometimes not as close as I'd like. Yeah, I do have a habit of putting stop losses that are so tight on a trade that I don't make money, but my subscribers do. They've got a little better sense than I do, or but I guess I'm obsessed with controlling risk, and I don't want you to be that way. You develop your own trading styles, but in any case, I can't get in with 400 shares, and when I get a little profit, I take half of it off. That's just the way I do it. So that's not possible right now, and so trade exchange, the ideal, what they would like, and you can certainly see why, is they like trades where you just get in and there's a nice wide stop loss, and then over a period of 2 or 3 weeks, 4 weeks, 2 months, you make 5, 6, 7, 8, 10, 15 points. But you guys can probably appreciate that none of those trades is easy. All the trades where it looks like, oh, that was easy money, we just had a great rally. It turns out when you look at the chart, there were enormous swings against the trade. And I find that most of my competition there, other people who trade and put out trades, that's the way they do it. They don't seem to care about risk reward. I don't think their track record is nearly as good as they claim, because ultimately you have to keep risk and reward in some propitious balance to make it work. But typically I see most everybody who's out there, all the gurus, and they just put in a trade and they let it go, and you'll weather enormous swings against you. And as I said, over the long haul, I don't think that's a very winning strategy. But all right, so my point was that I'm not able to control for risk in anything like the way I do usually. So I'm hoping that Trade Exchange comes along with these enhancements that will allow partial exits and things like that. So just bear with us. But I think anybody, if you've been a Rick Pick subscriber for a while, you know that we can surely deliver. All right. So anyway, we had great bottom fishing possibilities down here, and I would have guaranteed it was coming down there. And look what the little son of a bitch did. It rallied, and much as I want to bottom fish, it's a short sail up at this green line. You can see that the small pattern A, B, C, um, it came down almost to the exact sweet spot, rallied up to the green line. So, well, that's where we go short. So all I can say is follow this trade. If you have any doubts about whether these mechanical trades work in setups that are this pretty. All right, a couple other things I was looking at. I had a bid in. Let me say we had a bid in at 345, and let me show you the bigger pattern just so you understand what had us so jazzed. So here is everything we need, and the main thing that I liked about it was just the obscurity of the pattern. Again, nobody could look. If I took these lines off, nobody could see that ABCD pattern. We're the only ones in the world who know it's there. And look at how it worked out. Look at some of the subtleties of this pattern. Number one, I'm calling everything from here to there a straight shot AB, and it was. This is the internal peak that we got past, and this is the external. It looks like single bars on all three coordinates, maybe by a zillionth of an angstrom. No, actually, they're just good. They're good. They're the three single bar coordinates, which is always an enticement. But again, the thing to like most about this pattern is that we're the only ones on planet Earth who see the ABCD. And if you want to take it back to something that I've always taught in the Hidden Pivot webinar, how to pull the actual ABC coordinates out of something that's not that clear. Well, if you see, I say, look at the big picture first, and then, which is a downtrend. You know, when you look at this whole chart, the overall impression is of a downtrend. In that downtrend, where is the most significant move against it? And it's here. So here becomes BC. And so you automatically look for the lowest bar here, that's B, the highest bar up there, that's C. And all that leaves for you to do is to simply find a good A. There are just two possibilities here, this one and this one, but we took this one because this one's the one that's going to give us a turn first. If this D target doesn't hold, then we can try that one, all right, and it'll work too. But this pattern is obscure enough. The CD leg is so elongated, and we do have, I think, a pretty good confirmation here with the hits on P, and we even had a nice mechanical short. We had not quite the sweet spot. The sweet spot would have been CD coming down to here, and the rally would have been nice. We could have had, not with trade exchange because they won't give us, we can't do a short trade, but you can see, like any good pattern, it worked. The mechanical worked. Let's see whether you could have shorted it. Well, this looked like an overnight hit at the green line, but anything after here, but when it gets past the red line coming down, you got such a nice, in this case, obscure, invisible pattern. You got to do the mechanical trade, especially if this little rally here goes against not only this pattern A, B, C, D, but an even larger downtrend. So this stock is garbage. I don't know what the company does, but you can see. But I think the hidden pivot method is probably the best method you'll ever find on planet Earth for going against a trend. And it's not unusual for, if the market's up 1,200 points that we should have found the best short of the day when you could have made a nice piece of change with a trade that took just 16 minutes to play out. All right, so we had this bid down at 345, and we ended the day here. All right, so I'm thinking, well, it'll come down a little bit more and I'll still be a buyer there, but it didn't. It started to rally overnight, and it even spiked up there, and it came down. Looks like it came down to offset the spike right to the line again, or maybe a penny lower. I think this was a penny lower than the first low, but in neither instance did we get in. And I'll mention that yes, we could have done it, and you could have done it. We couldn't do it because the way in, if you're not dealing with something that gets to exactly your line, you'll know by now, I hope, that the RABC will still get you in. So in this case, let me take away the 24-hour lines, and I won't even say the jury's still out on using 24-hour bars. You're going to find that sometimes they'll work, sometimes they don't, and you'll need to develop your own feel. I would say more often they do work, but they sometimes the patterns that you create, if you're using these, in this case, I display my overnight bars as green. Sometimes the patterns you'll be trading are just different from the ones that you'll be trading if you're only using the day bars. All right, so let's use just the day bars here, and which eliminates that wacky overnight up and down, because I want to show you how else the trade could have been done. We're down here, down, 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 and with the RABC trade, we're essentially, one of the good things about that, the real useful pieces of it is that that we don't have to hit the line. We can say, I'm going to do an RABC trade, and here the AB piece of it is pretty obvious. A, B, C. All right. And we can do it this way so that let me show you here. So that when this thing is coming down, 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 we're adjusting the point C. We're basically saying, I'll do this trade if this thing gets within, 15 cents. It's a big pattern, and I may not be exactly right. So I'll do the trade if it gets within let's say a dime of the target. So we put a C here from this big reverse ABC pattern. We got the A, B up. You can't see it. And next bar, we drop it down to here, and we drop it down to here. And it's only when we get to this low that we get a reaction move that actually would have tripped the green signal. All right, so again, the problem with trade exchanges, we cannot use a buy stop limit to get in. We can get around that, and you can get around it the same way, and that is that you can wait for it to rally and trip your signal, your buy signal at the green line, and when it does that, you wait for a little bit of a pullback. You wait for a little bit of a pullback that takes you down through the green line, meaning you can execute a limit order. You can probably see the difficulties we would have doing that with trade exchange, because sometimes, it'll trip the signal, and then 4 seconds later, it'll come back down to it and take off again, and you won't get it. So it's one thing for us to be able to do that on a TradeStation platform, but to do it on trade exchange, where we've got a lot of people like looking at their phones to decide whether they're in or out, there's just not enough time. But I just want you guys to know what your possibilities are. All right, so but to take this whole thing a step further, there, to get around all this, what do you call it? All the difficulties of getting in a trade. Um, and I give my subscribers a lot more credit than I for being able to do this. But I get a lot of guys, they just get in, they put that bid there at 360 or whatever, and they put a nice tight stop loss below it. In my case, I'm somewhat conditioned to see my targets work so perfectly that, to me, 353, 348, 3 cents above the target line there is plenty. We're going to get within a nickel of the thing. So even if I'm good on the stop loss side. I can be really tight there, and I'll say I love the pattern that I'll bid 340, 346 for it. I just want a penny above it, and that's not to be safe. It's a little bit arrogant. It's really saying this thing's going to hit so perfectly that I don't want to come away seeing it touch 345 and not have me get long, and not allow me to get long. So I put the bid a penny above it, not because I think I'm going to miss the target, but because I think I'm going to hit it to the penny. So with that attitude, and it's not unfounded, really. I mean, I'm just sort of trading what I know. It's hard for me to look at the beautiful pattern that I showed you originally and think that it's going to miss by a whole, 7 cents or 8 cents, whatever it was. What was the low? Three, I don't know, 352, 7 cents. All right. So that's, I'm looking at this thing and I'm thinking, no, I don't. It's just not in my playbook really to put a 352 bid in for this. And then have to put another 6 cents on the stop loss side. I like to be below some sort of whole number, like $3.40. I'll put it at 339, maybe even 338. So because I need a 7 cent stop loss to handle that, to add another 7 cents to the entry risk by putting the bid up at 352, I just can't do it. I can't do it. So that's not an inhibition that's caused by the trade exchange platform, but just simply by my trading style. And when I catch it, I'll make up for lost time by getting the exact low, and there'll be some oohs and ahs in the chat room, and I'll describe it as a cheap parlor trick, which, as you guys know, it kind of is. But in this case, not terribly cheap. I mean, you got to know a thing or two to take a pattern like this and recognize why it's going to work beautifully, and it has. Let me the rally here has gotten to $4. Let's see. All right, so we've had a rally to 478. That's who knows what that is? It's 13/35. It's a 40% rally. From I had the low there within 7 cents, so that's pretty good. But I just I should you can see that we shouldn't have any illusions really about getting the swings exactly right and making money. And that's really the fallacy of all the gurus that put out, look how this trade did, and we made a ton of money with that one. If you look at the trades more closely, you see the little subtleties here that would have made the entry impossible, unless they really just sort of said buy here and we're not even going to put a stop loss in, and we'll be right. And yeah, I admit a lot of them do it that way. So when you look at the trades more closely in any of these, look at a Bernie Schaefer trade or a Sauce Sarnoff. I remember Agora had a promotion for him, how he turned $10,000 into $1 million trading options. But when you look at 50 or 100 trades, as I did, you discovered that with a little bit of slippage here and a little bit of could you really have bought those options and could you have gotten out at whatever price, when you look at those, you discover that his options trades are the same as everybody else's, meaning that the very best traders break even after before commissions. So that's what a lot of would-be traders say. You know, if I had my commissions back from last year, I actually would have made money. But as I pointed out to you guys before, that's one of the biggest fallacies in trading, that the difference between being able to make a little bit on average and losing a little bit on average, that's some sort of small step. In fact, it's one of the most challenging steps of all the possible ways that you could find to make money in this world. You know, so it's very deceptive. And I think probably most of you are aware of that by now. I mean, you've seen it. So I've never, for me, it's never been about making it look easy just for the sake of marketing. I want to show you guys really how difficult it is, even when you get things exactly right, as I can do so much of the time. Let me show you the last trade, which I canceled as well. This was we were just simply looking to buy the D target of a larger pattern. Let me show it to you. I take that back. We were looking, okay, this was a mechanical setup, and we have a wild and woolly AB leg here. You know, this is right out of the twilight zone, but actually not quite as gnarly as that last one that I showed you, because you can sort of see, and now that I've drawn the lines, you can see the ABC-ishness of it all. But we were looking. This is so cluttered, even I can't tell what's going on here. All right, so good pattern, and I want to sort of bring you back to square one for these mechanicals. Mechanicals simply they work because they start with an impulse leg that is so strong, and this one isn't exactly the strong. It's not as strong as it could have been with this sideways move here, but it's strong enough. If you can bring yourself to say, once this thing rallies up to the green, you know, up to the sweet spot, if you can look at the whole picture at that point and say, you know, there's no way that this thing is going to get stopped out below C, then it automatically becomes a mechanical trade. So the only question is, well, here there's a question. If we had a sweet spot high, there's no question to pull back to the green line with the stop loss below C. If it makes it up to the pink line, then we got a choice. You know, we can buy it at the red line mechanically with the stop loss here, which is 1/3 of the differential between where we got in, where we got long, and where we were hoping to get out at the D target. So 1/3 of that differential gives us our stop loss down here for a bid executed on the red line. So far that hasn't occurred, but it's still, there's nothing here that has queered the trade. It still looks good to me. And so because of the gap there, I put a little bit of my own thinking into it rather than the simple mechanical idea. And that is, if it comes down and it's not going to hit the red line and turn around, it's going to need to correct, maybe even fill the entire gap. So if we're going to let it fall that far, we may as well do the trade when it comes down to the green line. All right, now you're going to find that a lot of these trades, they don't get down to the green line. They're going to frustrate you like crazy by turning from just above the green line, or if you have decide you've got the guts to try the mechanical, the red line, they'll do a couple things to you. Usually, actually, they do hit the red line, but the problem is here with how high do they have to rally before you'd buy a pullback to the red line? And the answer is I like it to at least touch the secondary pivot. I like it to touch that pink line there before I think about buying a red line mechanical. And you'd be amazed at how many of them get within like a few cents of the pink line before pulling back. So I've sort of corrected a little bit, and I will do the red line trade, or sometimes wait till it pulls all the way back to green if it gets within whatever 5 cents, 10 cents of that line. And I don't use 5 or 10. I use a visual reference. If it looks like the space between the high and the pink line is microscopic, then I'll consider the line hit for all intents and purposes. All right, I'll do the trade on a pullback to the red line, and less likably the green line if we get to here or here or here. But once we get above the midpoint of the pink, the difference between a pink and the D, I stop liking the trade. In other words, we get up here, and unless the thing pulls all the way back below C, the pattern itself is still valid. C, as long as C holds up, the pattern's still valid. Meaning if we get up to here and pull back to there, the D target is still in theory valid. But as you know, we don't always go straight theory. Sometimes we put our own thinking into it. So there is another interpretation that we commonly use with these patterns, and this has been the one that's held sway over decades, really, of hidden pivot method development. And that is, if it pulls back, if it gets almost to the target and pulls back and starts making impulse legs, it starts taking out prior lows, it's over. All right, but before we know that, if it just gets up to here, close to the target, and it just gets hit, we take that as a sign of weakness. We say, hey, this thing didn't even have the moxie to get to the D target. And I admit it's a little premature to say that when it's up there, but sometimes you just have that feeling when it misses the target and pulls back, you're thinking that's it, it's spent. And not only that, but when it does start making those impulse legs going the other way, we should trade them aggressively, because a missed D target in one direction implies that that cycle, the bull cycle, is over and the bear cycle is beginning. And yeah, we have to differentiate out the different time frames of various cycles, and that's always going to be tricky. But all right, so right now, as things stand, you really, this is sort of the if you go back, you remember the Music Man, the movie, where Professor Hill orders the instruments and they come to the band members, and he has not a clue about how to teach someone how to play the trombone or whatever, but he just says, think the minuet in G, and it'll just happen. So here, I'm going to ask for a little bit of forbearance on this, but you kind of do the same thing. All right, I want you to simply consider it from an intuitive standpoint. We're up here. Do you want to buy P? And the way you answer that from a mechanical standpoint is to put your stop loss in there. And we know I don't have to calculate it really. I can eyeball it and say that the third of the difference between this and this, I think it works out to be about 2/3 of the difference between this and that. So I put this, and I can usually hit it within a couple pennies. All right, so I just want you to look at the overall pattern, especially this CD part of it, and ask yourself if it hits this green line, you know, is it going to come all the way down there and stop me out? Again, a visual reference, a visual deduction is what I want you to do. And here I looked at it, and certainly the gap is affecting my vision. This gap makes it easier for this to visualize this thing just falling into the hole. So that's why I'm not going to take a red line buy here. And if I don't, that's as much as saying I'm going to wait till it gets down to the green line, or I'm not going to do the trade. All right, so some good news here for you is, and this is it's just a matter of discipline. If you wait for the real deal, if you just wait for patterns that have everything we want, mechanical trades I'm speaking of, a good AB with a B that it's strong, it's steep, the AB impulse leg, it actually gets past, the B gets past some external, you get whatever, any kind of BC pullback, although not too quick. We want it to take a little time to get back to the X, to the green line. And then we want, or wherever it gets to, we want a rally to take us into the sweet spot. And the closer that is to the exact midpoint between P and P2, the sweeter it is. And then we want it to pull back to the green line. And if it does all those things, trust me, you've got a winner. And what I'm finding I do myself is I get a little impatient. I'm thinking, well, I haven't had a good trade here for a while, and I'm just gonna this trade I'm looking at right here doesn't go too far out of bounds, so I'll do it. And of course, my odds of putting on a winning trade go down commensurately. So what I'm learning myself really in the context of this venture with Trade Exchange is that even though they like to see lots of trades, and even though I make more money if I put out lots of trades, if I put out only the trades that are the relatively rare trades that I'm absolutely certain of, that's going to be a moneymaker for everybody. All right, and in the end, even for me, when the way Trade Exchange works is you get notified that I'm going to put out a trade, and you can opt in or not. If you opt in, the trade will be done automatically in your account. It's all passive. You don't have to do anything, and you'll get charged $30 for the idea if the trade makes money. So, if we're putting out lots of trades and most of them are winning, I'm sure I will attract a following. But if I were to sort of wait for the golden opportunities, and let's say I only put out like 10 trades a year that are guaranteed winners, that everybody knows, like my record is 100%. Well, more people will pile into those trades. So I think I think from my perspective, I can win either way. But to you guys, as far as you incorporate this idea into your own trades, it's a decision, you always have. Like, how perfect do I need it before I actually do the trade? But I know, and I think you must know by now, what a really beautiful setup looks like. It might be a little bit different for you than for me. We all have our preferences, but the important thing is when you find a pattern that you're really comfortable with, that's when you need to double down or triple down or quadruple down. It just you'll know it when you see it. And when I put trades out in the chat room that I say this one I just really really like it, which is like saying it's an 8 or better. I think you guys know all those trades work just about. So you got to calibrate your own instincts and appetite for risk to your ability to recognize some of these trades that just can't miss. All right, so let's see. All right, and there's no point. I used to really enjoy getting on the trades and getting hunkered down on the very small charts and finding trades. That certainly that I can't do with trade exchange. The time frame involved in entry and exits and the stops and all that, it's just too it's much too busy. But let's see if we can do something here anyway. It's kind of a nothing day. And before we look for little trades on the little charts, we always want to, we always want some corroborating signal or pattern on the larger chart. So here, let's see what we have. I think you guys may be able to see it already. All right, so nothing wrong with the pattern, and it's got a lot of stuff we like, and there's no reason why it shouldn't get to 3802. So, and there, I don't have to tell you, the hidden pivot system, even if you're not terribly good at it, it's always going to keep you, it's going to keep you honest, it'll keep you correct, it'll keep you from letting your own fears take over. And there could have been some fears when, overnight we were up the equivalent of 1,600 Dow points on news that Pfizer had this supposed vaccine, but it gave up more than half of that the next day. And so there was a little bit of uncertainty out there in the heartland of trading. But if you simply, and a lot of fear here too, this you can see we had a nice mechanical buy right here. Let's see. Well, whether this actually hit the green line or that did, we would have bought mechanically there, except we didn't. We're talking about $30,000 risk on 4 contracts. So we don't really do that. Although I have to admit that if I had $1 million account, why not? I would do it because I just know it's going to work. Most of the time, something that sets up like this, good, strong, not quite as steep as some, but at least you can see that it was so steady. It's a good, powerful move. There's no denying that. So all mechanical trades start with a good, powerful impulse leg, and what this thing lacks in steepness, it makes up for in steadiness. And you get a pullback, and then you get a move to within pretty close to the sweet spot. This is sweet enough. So this was absolutely a buy. But all right, as I just told you, I'm not really doing buys with $30,000 of entry risk, but I'm sure that over the long run, this will work the same as it does if you're doing smaller patterns, cheaper stocks, where your front end risk is not quite as high. They just work. They do. And yeah, I think what you're hearing in me is my inability to trust my own system as much as I'm telling you should trust it. So, and as I've mentioned many times, there are a lot of subscribers who do. They're on these trades when I'm thinking, I don't know. But for all I know, some of you did the well. I'm always looking for an alternative to simply buying this green line and putting a stop loss down there. I'll go to a lesser chart, and as soon as it trips what would have been my bid there on the big picture, I activate a smaller pattern, which you can see would have made money. This doesn't look like much on the daily chart, but if you're doing a little RABC down there on the 15-minute chart, the rally itself went from 3,556 to 3,410. So that's 54. That's a $10,000 move right there on 4 contracts. Even if you only had a couple and you took a partial profit, it's still an easy $2,000 or $3,000 over the course of a day. So that's how I look to cut it down. But again, I can't. You can do that, and I can do that. I just can't do it with trade exchange. I can't trade futures. Also, I don't think I mentioned that. It's just stocks. All right. So, but you don't need to take $7,500 of risk per contract on this big stop loss. You simply wait and say, hell, I would have had a bid there anyway. So I got to find some way to put a bid there, and the way that I typically use to minimize risk is the mechanical trigger on charts of lesser degree. So let's see if you actually had it there. The low was 3356. So hard to believe, but even though you can't even see a visual space between the low and the green line, it's 7 points. And in that respect, I'm not even sure I would have had the mechanical. Let me show you how that would work. I'm sorry, not the mechanical, but the RABC entry. Without getting down to the lesser charts, it would have been A, B, C. All right, and it's easy for me to say, look, I definitely would have. I'm bringing the C down, 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 down. All right, at what point am I willing to take the C and say, this is it? I'll take any rally. I could have had a C there or a C there or a C slightly lower. But at what point do I say, this is a C that I'm going to lock on the low? And if we get a 25% of this move here, meaning almost no move at all, I'm going to do the trade. So it looks easy on this chart. All right, let's get away from I can't really back up and show you the 1 minute chart there, but let's take it from here. All right. So in this case, we know that the D target's going to get reached. It's going to be achieved. And when we say that, that's as much as saying this C low is going to hold. It's not going to get taken out. When I say this D target it's almost certain to be reached, I'm saying with equal certitude that this C low will not get stopped out. All right. So if you're saying that, that's as much as saying that if you buy it anywhere in here, you're going to make money. We like to keep risk reward again in propitious balance. But in this case, just the hypothetical side of it is that we'll make money no matter where we buy it because it's not going below C if we put a stop loss below C. All right, so that sort of pushes us in the direction of, hey, well, do the mechanical trade at P or the green line. Where are you going to do it? So here, the visual idea comes into play. If we're looking at it and they're thinking, could this thing come all the way down to here to stop us out? And I think the answer is maybe, but it's probably worth a try. I say maybe because we've got a pretty steep CD leg to correct. It's partially correcting here from there to there, but now the bulls are just getting ahead of themselves again. So I'm thinking, they could get nailed here before this thing turns around. So I would say the stop loss, if we do a mechanical bid at the red line, the stop loss would be somewhere around here. And my visual intuitive projection is that maybe not. So I think I would take the risk here. Well, no, I wouldn't. I wouldn't take the risk. Let's just say it were not an expensive vehicle like this. Let's say it were a $12 stock. So would I do the bid there and take the stop loss down there? And I think it's kind of a 50-50 trade. I'm not wild about it, but I think it'll work. It's probably a little bit over the 50% mark, a bit more than a 5. All right. So the better way to do that then, if there are those doubts in my mind, is simply to take the P and RABC it. So all right. So we'll come down to a lesser chart here. Let me whip TradeStation into line here. All right, so you can see the bigger picture, and here's our red line where we were going to put a bid on the big picture, but not, because the risk is too high. So because it's a big picture, all right, a couple things we need to be aware of. We need, if we're doing the reverse ABC, we need a pretty good sized AB. We can't do any really little stuff unless we're sure of it, we're confident in a turn from P exactly. If you're working an RABC pattern, the tightness of your AB is often going to be predicated on how precisely you think the turn is going to come. So if you're looking on that big picture, on a bigger picture pattern, a chart, and you have a reason why it should turn precisely at P, then you can use a really small A reverse ABC to get you in, because you know that the first rally from there is not going to be a false rally and come down here and stop you out. It's likely to be the real deal. So the question is, all right, so let me back up. All right, so on the big chart, we've already seen that even though there's almost no visual space between the low and the red line, let's see how much space there actually is. There's 6 points. All right, so that tiny little space there is 6 points. So the question is, we need to answer the question on the daily chart before we get on that lesser chart that I just showed you to actually do the trade. So the question is, how close on this big line would we want to get before we start working a reverse ABC, before we do a reverse ABC, if it were available on the daily chart. Which it is not. We need a C lower than A to make that trade work. But all right, I think we're not quite. I guess if I'm looking at this and I were actually doing the trade on the daily chart, I'd say I wanted to hit the red line before I do the trade. All right, so when we come back to that little chart, where the heck was it? All right, well, thank you, TradeStation. I can't even find it. Was it the 15? I don't know. All right. All right, so when I'm wanting to do the trade and cut the risk on the 15, I'm probably going to use bigger reverse ABC than this stuff. This is too big, AB. So I take an artificial AB. I take something like here, A, B, C, and I wanted to hit the pink line before I do the trade. I'm just using this C as a placeholder, all right? And it didn't. It didn't. When it rallied, I would not have taken that signal. And it starts down again. And now I think, aha, this one's going to work. So again, I would not have taken the signal to buy at 35.21. And keep in mind, I can't do that with Trade Exchange, but I can do it in my regular trading account, and so can you, with a buy stop limit, or with the, as soon as it hits the green line on the way up from that low, you put in your bid at 35.21, a limit bid. That's how it fills. And again, I can't do that on Trade Exchange either, because at least not yet. And all these instances where I've said I've got one hand tied behind my back, they're working on it. They are going to produce improvements that will allow me to do a much wider range of trades. All right, so I would not have taken this signal because my rule and instinct on the bigger chart was I wanted it to come down to the red line before I did a trade. I would not have hesitated if this had come down to the red line and just touched it, at another 6 points, I would have said, hallelujah, that trade can't miss. And as you can see, it didn't miss. Now, ordinarily, I would say, screw it. I mean, it looks like those jerks from Goldman Sachs are front running me again. But I have to say, I honestly don't think that this red line, the pullback to the red line there, exists for most. They're not looking at it. I think that's ours. We own that. But maybe not. I mean, I'm always willing to concede that no matter how smart we think we are, and how much we think nobody else could see this, believe me, there's someone out there who sees it. All right, so going back to our 15, I really need it. If I decide that I needed to hit the red line on a big chart, then I got to stick by that rule on this chart. There's no and that's notwithstanding the fact that that's not a precise place where I expect to bounce, but I'm just sort of creating a rule. I'm saying I wouldn't do this trade until it hit the red line. Now, and let's take it the other way. Let's say that no, I decided I was going to do it if it before it hit the red line. Well, to the extent that I have no rationale for expecting a bounce from P on that big chart, I've lost my rationale for buying there. I mean, that's nowhere. I might as well just as easily have bought right here, or even here, or here. So if you're going to use the red line and it's in the context of that, the daily chart, stick with your rules. And yeah, maybe you can invent your own rules that would have gotten you in there anyway. Which goes back to my statement. It's always going to be tricky. I mean, it may look easy, but it ain't. All right. So if we were looking for even smaller stuff here, like the good old days when we used to force trades and say, put a gun to my head and I got a trade. Well, I hope you guys remember that all trades come from impulse legs that are legitimized by some external high or low on some wall like this. So we're pretty limited. Here's an external here, but not quite of the same degree as that one. This one here is of the same degree as that one. So this is the real, based on the whole rally that's happened from that low, even considering a stop out here, it's all beneath this external peak until here. So here was the first place where we had a high that exceeded an external, generating a good impulse leg. So this was the best pattern we were going to find today. A, B, C, conventional entry right there made us money. All right. I got to confess, it's like I don't even do conventional entries anymore. We're so far away from them. But I just want to make the point that if you're really looking for the subtle opportunities, they begin with good subtle impulse legs like this one, where the overshoot is so subtle that, well, I'm not going to say nobody saw it. Nobody saw a little bit of a breakout there, because if nobody saw it, it would have just taken off. Instead, we have this. It slid from there to there, and as you'll realize, it could not have fallen from there to there unless too many people got a little too bullish on that breakout. So yes, we are, as is the case with any other disciplined system, we're able to deduce things like that. We're able to read what's going on. We're able to sort of penetrate the psychology of this price action just by using our own system. Others work, but it gives us a handle on what's happening here. And we could sort of do second guess psychology. If a few too many people got bullish and it required this pullback to here, if more of them had been bullish, it would have needed to stop them out below that low. But all right, so, and let's see, we wind up, well, I can't really go from here now to here and call that a good legit AB, because this No, I'm sorry, I got that wrong. I'm not gonna, don't let me confuse you. All right, so the bigger pattern is here. This is one we might have used initially, and we could certainly use it. It's obscure enough that we can use the D target to get short. All right, and I want you guys to jot that down and back check. Check me on this. But I say the D target here is a pretty good short, and the mechanical buy at the green was not bad either. Not sweet spot. We're a little bit above the sweet spot, but good impulse leg here. This didn't happen. Everything from here to here is a straight line AB because it's only this last little piece of it that took out the external peak. So this is a really good pattern to use, and it was fine. It got us in with 3,553 bid limit bid. It got us out with a 5-point profit if we took half off at the red line. It's just a good little trade. Probably with too short a time frame for me to put out on Trade Exchange. So I'm saying a couple more things will work here. If we got a hit at the green line and pull back to the red, I think you could do a mechanical there. Your stop loss would come in around here. I do think you should get out of all your position at D, and if you're aggressive, you can reverse it. You can reverse it at D and go short. So all those things will work because it's a beautiful obscure pattern. The whole thing rests on this little stick up here getting a couple ticks above that external. So it refreshed the whole. We take a one-off low there because it's there and it's so pretty, and we get an ABCD pattern that no one else is using. And when I say no one in this instance, I mean really just about no one. That's it. We're obviously a little over on the hour because I started with some unrecorded time. I just wanted to make get a couple things out there before we went into our official session. So with that, I'm going to keep the recorder going and take your questions. And Earl, you've asked a few of them, but let me mention maybe this is your first time in here. But I take questions after the session, so it's not interactive during the regular session, but whatever you want to ask, I'm game. All right, so and I don't take requests certainly during. Oh, that was Taryn's request. All right, Taryn's been coming around for years. He knows better, but he wanted to look at DraftKings. I'll look at DraftKings simply because I've had it on my own trading radar. Although I guess, yeah, all right. And I'm bullish. I'm pretty bullish. And DraftKings you can see it's a buy. And this is a little bit different from what we've been looking at. And it just so happens that David in my trading group, he is the Zen master of reverse ABC trades. So here, it's set up a mechanical, but it's done it off a reverse ABC. So just keep in mind, I guess we haven't really looked at this pattern for a while. It is this style of entry, but it's perfectly valid. We were looking for a bounce to begin with because we've got this low down here, and it's bounced far enough so that you begin to see the reverse ABC-ishness of what I've ultimately drawn here. So we trade it the same way. There are two ways we could have traded it. One was with if it's precarious enough down here, my God, if it goes any lower, it's going to break beneath that low. Well, we could have done the counterintuitive trade, old style there. But the one of the main features of the RABC trade is you've shortened the counterintuitive A, B, C, where C has traditionally been lower than A, and you've shortened it by taking this interval and calling it an RABC trade instead of a counterintuitive. All right. So, and we could do the trade that way too. We could do straight counterintuitive, and I'm no longer putting a lot of rules and emphasis on, well, do we do the trade? Does it have to break beneath the key low there? Or if it's even with it or slightly above it, do we still do the trade? And the answer is I'm not really sorting that out. I think all three trades tend to work. And the one of them works best is slight breakdown below it, and then a really wicked, relatively quick rally. All right, so I like everything about DraftKings here, and you can see all the ways to trade it. But the one that I had drawn there that I was really looking at was right here. So it's sweet spot, pulled back yesterday to the green. We're long, and here, let's see. I'm not going to use the full stop loss here of $4 and change. I'm going to use. I'm going to set a stop down here now. I'm going to raise the stop because my idea is if it's going to go, it's going to go. So we got in here. On a big picture, and if we really wanted, we could have done it. Well, let's see. Could we have tightened it with an RABC, a smaller one like this one, A, B, C? That would have worked too. The only problem is, we're using a big AB in our reverse ABC pattern. If we go for a smaller AB, I think we can only do that if we have a reason for expecting a turn precisely from the green line. So we still could have done it that way. Just don't have illusions that we're shooting for. We'd be shooting for the. Well, I'll show you. If we did the smaller trade, let me take this away. Let's say this one here. I mean, this worked fine too. Just with an ordinary, you had a double reason to get in. We probably couldn't have gotten in here because once it hit the green line, it just kept going up. So I don't think we had a pullback for a limit order. I don't know even if I used TradeStation with a buy stop limit, whether it would have filled. So it's hard to tell, but you can see that this was a double winner. We not only triggered the RABC, A, B, C, trigger along right there, but it had the counterintuitive ballistic effect going for it, where you get stopped out here. All the bulls they're out of it here, right? They're all shook out. That's why this initial move is pretty steep. So there were two things telling you just get in at that, get in at that green line, or the green line would have been, something different if we went for the full counterintuitive trade there. Now we're in, same thing. All right, so still taking questions. All right, trade. Earl mentions Trade Exchange has some website problems. I still get an error message, but my trade comes up on the brokerage site. So, So have you done any trades that I put out, Earl? And have you at least made money on some of them? And let's see. I hope you can answer that. And as far as the problems, the people that are working for Trade Exchange are so capable, they're so bright, they're so sharp that, believe me, they'll get it fixed. All right, so Earl reports that he's traded and no money made. All right, well, I hope you weren't in that Beyond Meat trade in any case, but I promise you, Earl, we'll make you plenty of money. Oh, you were? All right, so are you still in the Beyond trade? Okay, all right. Well, you're in, we're in, we're all in it together. Um, all right. So I did spend some time on Beyond to give you my prospectus on it, and we're just going to stick with it. Um, all right. So a question from Michael. Uh, Start looking for trade. What time frame do you start with? I know HP works for all. You start with whatever looks good to you, Michael. And it should be a combination of things lining up on the bigger charts and the little charts. Um, sometimes I'll start with the 15-minute chart just to see if there's anything red hot and ready to go. And um, if I like it, I'll try to confirm it with charts of larger degree. And that's about it for today. All right, I'm going to bid you a very pleasant good day, and we will see you. We'll see you. Let's see, it will be the 25th of November. Show of hands here. How many of you would be? That's the day before Thanksgiving. How many of you would be vote yes? I'd like to have a session that day. Raise your hand. One, two, three, four. All right, three. Any more votes for yes? Let's have a session on the day before Thanksgiving. Well, I'm gonna. We didn't get too many votes there, so I'm gonna revise the schedule, and we'll go. I'm gonna push it back a week, so the next session will be on December 2nd, and I'll have to get that. Let's see. All right. All right. Well, that's it. We'll do. I'm gonna instead of doing a Wednesday before Thanksgiving, when some of you may be fortunate enough to be traveling or having a little family celebration pre-Thanksgiving. I know it's just a family time and doesn't necessarily start on Thursday. So I'm going to change the sessions to the next week. So with that, I'm going to bid you a very pleasant good day, and I'll see you again. Obviously, I'll see you in the chat room, but thanks for your kind interest.